Hey everybody, Courtney Smith here. Let's get rocking and rolling here. It's already Labor Day. Unbelievable. And this is unbelievable too. I mean, usually when I have a hard time going to sleep, I check out my disclaimers. But let's get right into it. You know, this market is just relentless. Look at that. We basically start this chart at the lower left and we end at the upper right. That's called a bull market, kiddies, in case you didn't know. So we have to keep all of our primary trend indicators. Everything is telling us we'd be in this bull market. Seasonality said we'd go sideways, and that sort of kept us in a sluggish bull market. Let's break it down. In the upper right-hand corner, buying pressure, green, is still higher than the red line, which is selling pressure. So the whole thing looks pretty darn good to me at this point. NASDAQ, also strong. The key here to me was the fact that the purple predictor, which had been weak, is now strong, putting the NASDAQ into new all-time highs. So all three major indices made new all-time highs this week. Unbelievable, unbelievable. Our seasonality indicator is bullish. It made new all-time highs. It would have to break down below 164 before I would turn it neutral. Not even bearish, but neutral. So we're in great shape here. Also, too, look at this. Here we are at the beginning of September, and the bearish seasonality is basically over. Now, we're not into bullish seasonality. That really starts October 1st, but the bearish seasonality is over. The pressure, the thing that had been keeping the market from really exploding to the upside, it's gone. Let's take a look at Ned Davis. They say it's still going to be bearish until the beginning of October. So they still have that there's the potential for a dip here. But you know what? Okay, if we have a dip, 2%, 3%, 4%, no big deal. And then the fourth quarter is going to look very, very sweet. Yield curve, once again, you know, it's a one-year leading indicator, and you know, right now it tells us that next year, not a problem. But we're down around 75, which means in 2019, well, things will not be so hot. So we have to keep an eye on that. Now, asset allocation did turn much more bullish. Look at that. We're back up to the highs we were before, showing that the market's loving the stock market. They don't want to be in cash. They don't want to be in bonds. They want to be in stocks. And that's providing the new cash to move us higher. Stock market risk indicator, still not that great, which means that although they want stocks, what they really want are kind of safe stocks, not risky stocks. And global shares, really, like I say, who cares? The key here, look, I only like to focus on things that are in big bull markets or big bear markets. And this is what we call, from the Journal of Portfolio Management, we call this a piece of garbage. Okay, and then bonds, you know, I'm very bullish on bonds. But this week was not that great. Friday was obviously a very, very poor day for the bond market, showing that there's a lot of money coming out of bonds and into stocks. But the underlying fundamentals remain very bullish for the bond market. Let's take a quick look here. Our bond key factors, all of them are pointing down. All of them are pointing down. Now, they stabilized a little bit this week, but still, it looks pretty darn good for bonds to continue to rally and make new highs on the move. The dollar, I don't really care about the dollar. Look, we're at the same price we were in May, so boring, not interested. Gold, we bounced back up to the breakout line. You can see it right there. Now, normally, based on classical chart analysis, we should see gold now turn around and start to move lower. So this is going to be quite interesting to see what it does this week. I'm really not that keen to be a trader of this. I'm not really seeing a strong trend one way or the other. Let's take a look right here. And you can see that 2 out of the 3 indicators are bullish, but one of them is bearish. I'm still counting the yen as bearish, but the euro and the CRB are slightly bullish for gold. So maybe we'll see some stability here for a change. Oil, this has really been doing exactly what I told you it would do, which is to do nothing. And finally, Bitcoin did exactly what I told you last week. We're rallying. The reason I called for the rally was the purple predictor breaking out to new highs. It's still not going to be a bull market, but it looks like we could get up over $8,000 and maybe 8,100, maybe 8,200, but I'm not seeing a big bull market yet. It looks like we're in a trading range between this 5,800 level and about 8,200, something like that. So I'm not really seeing any reason to be a trader of Bitcoin at all. Hey everybody, that's everything. We got some great classes come up. We just had one a couple of weeks ago, but look, September's got 2 courses. I know you're going to want to come to both of them, and then naturally book your tickets now for October, and I'll see you in Dubai. Be there or be square. And then of course we get a lot of our information from the stockbutler.com. They just have some tremendous stuff. If you want to see what's really going on behind the scenes of what I do here, stockbutler.com is a really great place to be looking. All right, that's it for me this week. For you freebies, fully paid up members, just hang in there for just a second.